Good morning, everyone. Welcome to our seminar today. My name is Cheryl Dyck. I am the President and CEO of MSI Action Group, and today we are going to talk to you about funding for your business. How many of you have wondered how to grow your business with the limited funds that you have today? How many of you have felt that it's an insurmountable obstacle to the growth of your business, or that you have no idea where to start in these economic times? I'm here to tell you that today we're going to talk about a few things. First, before we get started though, I want to talk a little bit about what we do. So MSI Action Group is a coaching and consulting company. We are a full service coaching and consulting company for business owners. Our target market is medium to large businesses. However, we do help businesses from startup to succession planning and sale out the other end. We also help businesses to navigate the obstacles of growth. So we do business planning and projections. We do funding assistance, and we help businesses align with the right funding organizations to grow their business. And we also help with training. We are able to do training that is admissible to the job training grants for people that have lots of employees. We can help with grants. We can help with private funding. We're going to talk about the funding options today. But more importantly, we like to align with our business partners to make sure that their businesses are successful. So we don't just drop in and out of an organization. We consider ourselves to be advisors to our business clients. So what we're going to talk about today are four things. We're going to talk about the funding options that are available. I'm going to take some time and probably some more detailed time today on what you need for the information when you go for funding, because what we're finding is this is the area that the people are getting hung up on. There's lots of funding options out there, but they're not able to take advantage of them because they are not ready. And a lot of it is the business owners themselves are not ready, because a lot of the onus on funding is what the business owners look like, and whether the banks or the funding organizations believe that you as the business owner are a good, strong business to support. So if you don't have a good, strong picture as a business owner, you're going to struggle to get funding for your business. I'm going to talk a little bit about what steps you can take to proceed, and some options that are available if you are ready to take those next steps. So tell me, where do you start? I see there's lots of people on right now. If you have an idea, please enter it into the chat room. I will be controlling those from my end. And then we'll go from there. Oh, someone said, I need to do a plan. Yes, that is absolutely one. What else? I need to meet with my bank. Yeah, you can. That's a good start if you're dealing with a business banker who is experienced with the whole funding process. Let's see. Yep, absolutely. How are you navigating that? That's right. So there's lots of places to start, but let's go through the process and see if there's anything that you can do that can help you to be successful. So I'm going to play a video for you first. It's a little video from the BDC, and it talks about what banking organizations look for. It's quite a useful video. Maybe.
It's not playing?
No, it's not playing. Come on, play. Oh, there we go.
Well, it's just us anyway.
this is being recorded so I can post it again.
As an entrepreneur, you want your company to prosper and grow. So you will likely need to find financing for your business. But the idea of meeting with a bank might make you nervous. Understanding how banks think will help you feel more confident and improve your chances of getting a loan. Bankers are business people too. They need to assess whether your project is an acceptable risk for them and if you will be able to repay your loan. Their risk evaluation will not only determine whether you can get a loan, but also what the interest rate and conditions will be. You should have a detailed business plan because it is your job to make it easy for the bank to lend you money. It should present your business opportunity, backed up with statistics, market studies, and reports. It should also introduce your team and clearly outline your plans for the future while avoiding jargon or too many technical details. Overall, your business plan should address the factors they will be evaluating. Before meeting with the bank, be sure to check your personal and business credit scores. Ensure your comments reflect what's recorded there, and have the basic documentation you'll need to apply, such as your financial statements. Show them you're willing to put your own money into your business. This shows your commitment, financial stability, and willingness to share risk with the bank. So, what exactly do banks look for? Well, they will evaluate your project itself. Will it contribute to the profitable growth of your company in the years to come? They will also look at the ability of your business to repay a loan by analyzing the following indicators: the financial strength of your business, including the cash flow it generates, and the state of your personal finances. Assets. Do you have assets to secure the loan, meaning assets the bank can seize and use to repay itself in the case of default? Your management credibility, including background, past experience, education, and the professional training of you and your management team. And finally, they'll carefully analyze your industry, the economy, and the competition. Basically, banks are looking to reduce the risk of lending your business some money. The better you present yourself, and the more solid your business plan is, the better your chances of getting your loan approved, and you getting the money you need to grow your business and succeed.
All right, so let's talk a little bit about some of the things that we know are obstacles to funding. So the first one is organizations often approach funding organizations with no business plan. They don't have a business plan, they don't have an executive summary, they don't have a pitch deck, and they don't have any financial projections. So the banks or the funding organizations see them as a high risk. People are not prepared, so they don't have all the information readily available before they go to the bank. There is some key information that funding organizations will look for every time. So if you can have all that information available ahead of time, you look like you are really on the ball and ready to be funded. So you're serious about what you're asking them to do. And you don't have the right help. So a lot of organizations will rely on friends and family for advice around funding. You really need to make sure that you have people behind you that that are able to help you and that can give you the right advice and the right support for your organization. And not everyone is created equal, so it's best that you keep the right people on the bus, and if you don't know who those are, there's help out there to help you with that. So what we have found are the success factors for funding are complete transparency. So there's lots of people that have gone through the last 4 years with, and it's been a pretty up and down rocky road for a lot of people. But it's really important for you to be open and honest and transparent about where you're at and how things have gone, and how well you have been doing both personally and in business. The more transparent you are, the more the funding organization can try to help you. If they find out things that you haven't been open and honest with, you actually give them an uneasy feeling about whether they should trust you in the funding process. You want to be fully prepared, as we have spoken about, and have everything ready that is typically asked for ahead of time. And make sure you have the right people with you to give you the support that you need. All right, so let's talk a little bit about the types of funding. So there are multiple types of funding. This is a summary list. I'm going to go through each of these types of funding in detail, but let's start with the first one. So banks, everyone knows who banks are. There's government business organizations like the BDC, there's private lenders, there's investors, there's grants to train your staff and your employees, and there's lots and lots and lots of alternative funding. But I'm going to make a statement right now, just keep in mind as we go through these. There are also lots and lots and lots of people out there who are not legitimate funding organizations, and there's lots of scams, and there's lots of people trying to take your money and not give you the funding that you need. So you have to be very, very careful to do your due diligence ahead of time. So what's the difference between a loan and a grant? So a loan is typically from any organization has a set defined interest rate structure, either a fixed rate or a variable rate. It has a repayment structure, so how they want you to repay, whether it's monthly, whether it's delayed by 6 months and then you start paying, and there's terms for the repayment. So how many years, how quickly you can pay it back, if you can pay it back early, those sorts of things. Grants, on the other hand, are typically not repaid, but they must be used for the purpose that they are granted for. And normally there are reporting and accountability requirements around them. And most grants are for a specific purpose. Another variation on these are investors. So people that are willing to put money into your business to help you grow your business. So the information that you need, I'm going to spend a little more time today on this than I typically would do, because what we're finding is there's a lot of people that are not ready in this area when we go to do funding with them. And you as business owners need to make sure that you yourself are ready and that your personal situation is healthy. If it's not, your unhealthy situation is going to impact you being successful in your business. So often we have to stop and get your situation under control before we can actually help you fund the business. So the first thing that I want to talk about in this area is the year-end financials. So if your business has been in business for over 2 years, you need to make sure that you have year-end financials ready, but created by a CA or a CPA for your business. So that means they're not created by your aunt or your uncle or your mother or your sister or your brother or your spouse. They're actually created by a CA and reported to the government under the proper accounting principles for Canada. You also need a business plan. Now there's different types of business plans, but you need a business plan. And sometimes you can get away with having an executive summary or a pitch deck, but you need a business plan. The funding organizations want to know where you're going and how you're going. They also want to see a 3 to 5 years of projections, including a fund repayment that you show in the projections that you can actually handle the repayment of the funds that you are asking for. Now, if you don't have a business plan, it's better to take the time to create one and get it ready so that you can present it and look like you're ready to grow your business. So you have a plan, you've thought out your future, you have a vision for the organization. It's not just a number that you're trying to hand to a banking or a funding organization on a napkin. Here's the next one. The next couple are the ones that I find are really getting people caught lately. First is credit score. You need to know your credit score. And I don't mean going on Credit Karma and getting a public credit score. I mean you run your detailed credit report from a reputable credit score organization like Equifax or TransUnion. You can get Credit Karma, but get their paid for credit report. You want the detailed credit report and you want to look it over. You want the credit report for every owner of the company. And in some cases, you need it for the owner's partners, like their spouses or their significant others. Because depending on the age or the size of the organization, your partners will become important to the decision-making process. You want to look over your credit report. And these are the things you're going to look for. You're going to look for items on there that are not up to date. So for example, if you've paid off your mortgage, you want to make sure that the mortgage has been removed or discharged from your credit report as fully paid. You want to look at all the credit cards and all the loans on your credit report and look for a few things. One, is that credit card still yours? Is your credit card showing as fully paid, or what the status is, and is the status equal to what you understand it to be? Are all the credit cards on your credit report yours? And are there loans on the credit report, or leases on vehicles, or leases on equipment, or loans on vehicles that are yours? And are they all yours? And are they currently in the status that they should be? Make sure you look that over, because if there's stuff on there that isn't yours, we need to get that remediated to give you the best credit position possible. For most funding organizations, you need to have 700 or greater as a credit score. In the last 3 or 4 years, banks have been willing to go down to 600, but when they go down to 600, there's other factors that they start increasing the importance of in their decision-making process. So if you don't understand that, then please ask us. We will help you review your credit report and make sure you're ready for funding. If that's not ready, we don't want to take you for funding, because we know they're going to ask that, and we know they're going to pull your credit report. The next thing that's important is your notice of assessments to CRA. So the notice of assessments for the company, as well as your notice of assessments personally for the last 2 years. What they're looking for is that the company has been paying on time, and you have been paying on time your taxes, and that you are up to date on your payments to CRA. What that tells the organization that wants to fund you is, are you reliable to make your payments on the loan that they give you, on the money that they give you? So if those are out of date, or if they're not up to date, we want to get those caught up before we go for funding. The next thing that we want to talk about is there's other pieces of company information that might become important. Current year-to-date financials. So if you're in the middle of a year, they may ask you to produce financials up to a certain point in the year. They may ask you for accounts receivable reports, or customer reports, or accounts payable vendor reports. They may ask you for project projections to see what kind of projects you have planned and are coming up in the future. They may ask you for signed contracts or POs or signed estimates to see what kind of commitments you have from future customers. They may ask you for bank statements. Some funding organizations will ask you for 3 to 6 months of bank statements. What they're looking for is, do you keep your bank statements positive? Or do you rely on your overdraft all the time? Or do you do NSFs? They're looking for things to see if you are a payment risk. And there may be other information that they're looking for. The other thing that becomes important is your net worth statements. Now, I have people often say, I don't want to share my net worth. Well, as the owner of the company, your personal net worth, your ability to protect your future, tells the banks and the funding organizations whether you are a smart risk. It also gives them an opportunity to say, if you are unable to pay through your company, do you have the assets or the net worth personally to be able to protect the loan that they're willing to give you. Now, if you're confident in your company and you're confident in what you're trying to do with your company, there is no personal risk to providing your net worth. And you need to be completely transparent with your net worth. So not hiding some of your net worth. You need to tell them what your total net worth is. And if you're not willing to do that, I have to ask you, if you are not willing to share your net worth with someone else, why would you expect them to share money with you? Because the trust relationship that you're trying to build with these funding organizations is reliant on you also trusting them. So if they ask you to do a net worth statement, you need to do a net worth statement, and you need to do a full disclosure net worth statement. I've had people say, well, I don't want to share this with them. I want to keep that a secret, or I want to keep these other investments I have globally a secret. You need to be transparent so that they understand and can argue for you with the back offices or the underwriters that they work with. If you don't know how to do or have questions around net worth, or you don't have net worth, what they often will ask you to do is have another business partner who's willing to sign as a guarantor. So what that business partner or that guarantor is doing is they're putting their net worth up against your funding. But I strongly recommend that you come to the table first as the business owners, because that's what the funding organizations would like to see. They also like to work with real business entities. They want to work with partnerships and corporations that are true business entities. So if you are running as a sole proprietor or self-employed, even if you have employees, I'd like you to consider you're setting yourself up as a real business entity, whether it's as a partnership with your husband or wife, in a corporation, or whatever it is, that whatsoever structure, but it's better to be set up for all sorts of reasons as a real business entity. And there's other information they may ask for as well. And they may also ask you for your T4s, your T5s. I also want to mention that if you are working and you're starting a business, stay working. You need to be able to show that you have a steady income into your life to be able to support the business requirements as well as your personal requirements. We've had people that have gotten really excited about growing their own business, and they've quit their job. The funding organizations do not consider EI as a viable funding source for you to support yourself and your business. So while you're starting up your business, you're going to be juggling between an employment and your business. Unless you've got a whole bunch of money saved up so that you can support yourself financially while you grow the business, you need to keep yourself employed. And sometimes people don't understand that, and it's really, really important. One of the factors that organizations look at when they're looking at you and deciding if you are a safe risk to work with is your debt to equity ratio. So they will look at your debt in the company and how much you want to borrow against how much money you have in the business, how much equity you have to leverage against. And what they're looking for is they want the number to be as low as possible. So they want to see that you have as much as possible of equity in the business to counter or balance out against the debt that you're asking the company to carry. Now, often a lot of people say, well, I don't have anything in the company. Well, that's when your personal net worth gets really important, and the health of your personal life, your personal assets. So don't expect organizations to put all the skin in the game and that you put nothing in the game. Be fully prepared to put money in the game or leverage against assets that you currently have, whether it's equipment for the business or whether it's personal net worth assets. Be willing to put those as collateral against the funding that you're asking for, because you need to be willing to put skin in the game. If you're not willing to put skin in the game, the funding organizations will not fund you. All right, so let's go through some of the different organizations. The first one is the banks. Everyone knows about the banks, you know, the big four: RBC, Bank of Montreal, CIBC, and Royal Bank, and TD Bank. And then there's some quasi-government banks like ATB, there's Community Futures, there are credit unions, there's lots of different types of credit unions. Bow Valley Credit Union is one of them. So those are banks that are, or credit unions that are slightly different than some of the bigger banks. Every one of them has its strengths and weaknesses, and every one of them has a different funding model. Most banks will lend to you on several bases. One is your credit history and your personal net worth and the strength of your organization today. If it's a brand new startup, the whole funding of the bank, of that loan for your new business, is based on your credit, your personal net worth, and the strength of your business proposal. So your business plan and your projections. The bank can handle different things at different levels. So the smaller loans up to about $250,000 can be handled with small business advisors in the branches. When you get into larger loans, you start to work with the commercial banking centers or the big business banking centers in the banks. There is a lending program that is a government program that is run through the major banks, which is called the Canadian Small Business Financing Program or Loan, or CSBFP, or CFSBL, depending on which one you deal with. It is a special fund for startup businesses that provides a baseline for growth, and it's a quasi-government, it's a government program that's run by the banks. And if you want to run something like that, we can help you find the right bank and the right person in the bank that can help you access those funds. Those funds are typically up to $350,000 for equipment and up to $1 million for a facility or a building. The other thing that banks provide is lines of credit. They can provide credit cards, credit card business lines, which are credit cards with a business line of credit, lower interest rate, and all sorts of other flavors. Or they can do commercial mortgages, you know, that sort of thing. So they're quite handy. Right now what we're finding is if you are struggling with your credit history or your personal net worth, or your business has been struggling over the last 3 or 4 years, some of the major banks are not doing a lot of lending to that criteria. So you might need to find a partner or an advocate to help with that process. The BDC is the Business Development Bank of Canada, and it is a government bank. The whole mandate of the BDC is to support businesses. They provide loans based on your credit history, your personal net worth, or your year-end financials. The bigger loans from the BDC also have to be supported with a business plan and projections and a lot more information. They have a quick loan process that if your business has been around for more than 2 years, you can go to the BDC Virtual Business Center and get a $100,000 quick loan. And it's based on year-end financials and your personal strength, your credit history, your personal net worth, and you as a person. The next layer is business loans up to $250,000, where you meet with a business advisor. They're lower interest rates and they're flexible terms. A lot of the loans from the BDC are interest only for the first 6 months, and they can also build in seasonality and all sorts of other things, and they usually can be paid out in full at any time. So if a business grows very quickly, they can pay off their loans as quickly as possible. The larger loans that are handled by the BDC are handled by specialty groups, and they're often for startups or restructuring or growth projects. They can also be for inventory funding or project funding. And there are lots of different groups within the BDC to handle different sectors of the business industry. The next group that's important to look at are private lenders. So private lenders are groups or organizations who provide private loans. And the loans are usually based on your credit history, personal net worth, your business plan, and your projections. They're typically higher interest, and they're looking for a return on their loan. Some examples of some of the private lenders are bridge funders like On Deck or the Lending Loop, or what's another one that's out there? I just completely forgot. Anyways, so they typically want a return on their money, and they have payment terms. Some of them are daily payback, which is, I find, excessive. Other ones are weekly, others are monthly. They want to learn, they almost work the same as a loan from a bank. Others will want a percentage return on their money and a potentially an equity position in your business while they are waiting for the funds to be repaid. And you need to make sure that they actually have a legitimate business. What we're finding is there's lots of people that are posing as lenders, and they're not legitimate lenders. So you need to figure out a way of verifying their identity, either with government-issued documentation, or have a video call with them, or they've been referred to you from someone that's already used them, some way of validating that they're legitimate. We have seen organizations where they say they are big lenders, and you actually dig in and their documentation is incorrect. I've had them actually issue us corporation documents, and the corporation documents aren't even valid. They've got an address in the US and they've got a postal code in Canada. So you got to be very, very aware of whether you're dealing with legitimate people, and they're getting smarter and smarter all the time. So they look quite legit, and they're not. The next group that we can talk about are investors. So there's lots of people out there that have investment portfolios that are willing to invest in businesses. Again, they can be private individuals, or they can be private groups that are willing to do funding. They'll do loans for you. And again, it's based on credit history, your personal net worth, the business plan, projections, the strength of the organization. They'll ask for the same information that we listed out earlier. Some will want a return on their money just for the loan and set a period of time and a payment structure for you. And others will want an equity position in your business in exchange for the funds. Now, some of them will want it permanently and stay as investors in your business, and some will want it as a collateral against the funds, and when the funds are repaid, they return the equity to you. They can be individuals or angel investors. The same thing applies as what I talked about with private lenders. You must authenticate them as real people and that they're legitimate. And if they are asking you to put money up front to process your loan, chances are they are not legitimate. If they're going to charge you an admin fee, push to have the admin fee processed when they give you the funds. So the admin fee comes out of the funds that they provide, and you don't have to put money out ahead of time. Most of the scams right now are asking you for a payment up front, and then they disappear. And lots of people are being taken to the cleaners. So the next one I want to talk about are grants. So there's thousands of grants out there from governments and private organizations. The grants are applicable to different industries, and there's lots of them there for startup businesses versus growth businesses. Some grants are women focused, some are immigrant focused, some are indigenous or aboriginally focused, some are special needs focused, some are based on hiring, some are based on staffing, and grants come in different forms. So an outright grant will give you money for a specific purpose in your organization. A tax credit comes after the fact, and you submit it to get your money back after you've spent the money, and it comes off as a tax credit later. And subsidies are for employees, so you can get subsidized to hire staff, and they will pay a portion of the staff's salary while they're being trained or while you're hiring them. The most important thing to remember about grants and funding around grants is it takes time. Most grants take 4 to 18 months to process, and you go in a pool with everyone else when you submit the grant application. And only those that are successful will obviously get the funding. So you need to mix up your funding model, and so that you can get the right funding for the right times in your process. And you will likely have to produce funds of your own in a matching process. It could be 10%, it could be 25%, it could be 50-50, depending on the grant. So you need to come up with a plan ahead of time on where you're going to get your section of funds from for the grant process. And it could be a loan, it could be a line of credit. It just needs to be something that you can show that you have the funds to also participate in the grant process. So one of the special grants that we talk about is the job training grant, and we often help businesses to actually use the job training grant. Now our training that we provide can be done under the job training grants, but we also help other businesses design their training programs for their clients to use the job training grant. So we often work on both ends of the spectrum. So the Canadian Job Training Grant is managed by province, and it's designed to help businesses train and upskill their teams and their employees. So all the people that you apply for a job training grant with have to be employees, either a current employee or someone you are immediately hiring. So employees are those you're paying on payroll, whether hourly or salary, and you're submitting to CPP and EI and income tax for those people. The employees must be Canadian citizens, permanent residents, or they fall into a special refugee category. The government will cover up to 2/3 of the training costs for each employee. So the maximum that they'll cover per employee per year is $10,000, which means you can have a training program of up to $15,000 per employee per year. The government would cover $10,000, and the company would cover $5,000. The company can train up to 30 employees per year per company under the job training grant, and the training has to be completed within a 52-week period. The training has to include 24 hours of training, and in Alberta, it was dropped in 2016 to 21 hours, but 24 hours is safe. And it can be any type of training. It can be workshops, it can be one-to-one training, it can be team training, it can be strategic planning training, it can be all sorts of types of training. Owners of the company and their immediate family are exempt, as are board of directors. So anyone on the board of directors or owners of the company, but aunts and uncles, cousins can be trained, and any other employees can be trained under the job training grant. And it's a really simple, straightforward job training grant process. It's probably one of the easiest ones to get and subscribe to. Again, the organization has to be a business entity, and there are some circumstances where they will allow sole proprietors to submit for the job training grant, but it has to be pre-approved. So the last category is alternative funding. So the alternative funding covers a very large spectrum, but most of it falls in these areas that I've listed here. So you can do lease-to-own funding. So you can use a lease on equipment to purchase the equipment and lease it to own it. You can also do that, by the way, on purchasing buildings as well. There's a lot of organizations that are allowing you to do lease to own on buildings as well. You can factor receivables. So really what that means is an organization gives you funds based on the receivables that you've invoiced for that you still haven't received. So a lot of companies that do very large projects or construction projects where there's a long turnaround on payment will ask companies to do receivable factoring. It's a great way to get money back into your cash flow and yet still get the receivable down the road. There's asset-based lending, there's purchase order financing, there's leasebacks that you can put together on equipment you already own and take funds out against the equipment. There's bridge funders like OnDeck, Roynet, Innovia Capital, and many, many, many others. And there's also groups now, which I think is really cool, who will act as your receivable and payable management company. And what they do when they do that is they'll actually release money to you, much the same as receivable factoring, to keep the cash flow running in the organization. But they work on receiving the funds for the invoices, and in some cases they will also pay your vendors. So there's companies that partner with you and they act like basically your accounting group, and they will handle the invoicing and the vendor payments in the company. And in exchange for that, they will make sure that the company has the cash flow it needs to run the business. So that's a handy little niche that has just started arising, and it's getting a lot of review and a lot of positive feedback. So what would you do with the funds? Would you buy a building? Would you train your team? Would you hire a team and build your team in the organization? Would you use it for sales and marketing? Would you use it for business growth? So a combination of all these factors, or equipment? So I want you to pause for a minute and tell me what it is you would use this for. Oh, I see building. What else do I see? I see growing my team, so that's good. So adding more team members. I see 3 or 4 of you that said we need funding for projects. So a lot of what I see, or my team sees when we're doing planning with organizations, is the fact that they need growth. They need either a bigger building, they need equipment, they need money to run a project, big company growth. So and often that includes cash management or a cash aspect as well, to make sure they have enough money to run the operation day to day. So what are the next steps? One of the things that we recommend and we're going to offer today is a business assessment, and it's a complimentary meeting that we have with business owners where we review where you're at today and what you're trying to do. And in that meeting, we'll often go through that list of information that you saw earlier and ask you, do you have everything that you need before you go for funding? And if you don't, that's where we'll start working with you to help you prepare, because you want to go in ready and prepared for what you need. The next thing is a real business plan and 5 years projections. If you don't have a business plan, even if it's an abridged version of a business plan, you need to get a business plan. My team has an expert on it that will help you actually write the business plan in a really nice format that is acceptable to the funding organizations, and we will create a 5-year projection for your business. And we know the format that we use for those 2 items are acceptable to the funding organizations. Then you need to review your options and pick the ones that you want to pursue. Now, I want to also mention that if you're going to go for grants, you need to have other alternative funding lined up as well, for 2 reasons. 1, you need to put skin in the game with funding, because most grants have matching. And 2, if you don't get the grant, you need to have a plan B. You need to have other means of making or getting that funding that you need. The final thing is you need to determine the amount that you are looking for and what it is that you're using it for. So we call it your funding plan. So you need to determine how much money you need and what it is you need it for, whether it's for operating costs, whether it's for a project, whether it's for equipment, what is it for, and you need to list it out. The banks want to, or the funding groups or the grants want to understand what you need the money for so you can justify getting the money. So is there any questions so far on any of the information that I have provided? I'm just going to put this up on the screen while I answer some questions. So one question I had is, what is the typical turnaround for funding? Well, it varies by the type of funding you want and the amount of funding you need. So if you need small amounts of funding, and we go to, let's say, one of the bridge funders that does short-term funding, you can have funding within 48 hours if you have everything they need ahead of time and you have a really strong credit history and a really strong net worth to go along with your business's health. The more they have to justify that the business is a low-risk business, the longer it takes. Also, the bigger the amount of money that you need, the longer the due diligence process is. And it can be up to 3 to 4 weeks before you get an answer on funding. So you need to be aware of, if the more you're prepared ahead of time, the more you have all of the bases covered ahead of time, the faster you will get the funding. And does that make sense? Okay, good. Doesn't matter what industry you're in. Well, I would like to say no. However, in this current economic time, if you are in oil and gas or in oil and gas servicing, you need to have a stronger argument for funding than someone who's in a different type of industry. And there are funders out there that are specialized in different areas. So the parameters around different types of funding varies. Next question. Is there a difference between banks? Theoretically, no. They all have to handle the same criteria. However, we are finding that some banks are more lend themselves more to different industries. Some banks are more comfortable with certain industries. Some funders are more comfortable with different industries or different sizes of businesses. So it just depends on the business, which is why we want to do that assessment with people. And we would rather help you to be successful and to be prepared ahead of time than see you go to the bank or go to the funding group not prepared and be rejected immediately. I don't see any. So hopefully that helps you with your funding. Hopefully that gave you some information that you can take to heart. If you would like us to send you the funding readiness checklist that we have, please access the email that's on your screen right now and send us an email, and we will connect with you, set up a complimentary assessment, and provide you with the checklist to get you started. I want to thank you again for your time. From my team at MSI Action Group, we hope you have a wonderful day.